Hey everybody, it's Pete. Good morning. Welcome to today's Stock Market Live. In today's episode, we're going to talk about whether or not energy prices are ready for a much bigger crash. Have tech stocks topped out, or are they going to remain hot? I will tell you this, the market is setting up for some really good trades next week. And one of the biggest questions we get is, how do I get better entries? And really the bottom line, better entries comes from better prep. So when you're looking for the best stocks to buy now, it is much easier to get near that optimal entry when you're ahead of the game instead of reacting based on news headlines or those kind of things. So we're going to do a little bit of a deep dive into tech stocks, the hottest tech stocks that we've been watching and really trading very actively. We're going to also do a deep dive into sector rotation. So I actually made a kind of a fancy little thing today here for everybody to get a really good to get a grip on exactly what we're going to be working on today, which is the rotation from, the market into sector rotation, into hot stocks, into news to trade. That's actually what we're going to cover today. You know, what we're also going to do today is we're also going to go over some of the stocks that you are trading right now. Anything that you're looking at right now, as long as it's not a penny stock, I don't look at penny stocks or anything like that. Type it in. We'll do a little quick review on that. We'll see how I'm looking at it from an order flow perspective, give a little bit of feedback on how I'd be looking to trade those kinds of stocks. We have a ton of stuff to talk about. I'm also going to recommend a book today. For those of you that are more on the full-time side of trading, the proprietary trading part of the business, especially in New York City, is very, very competitive and very popular. A friend of mine actually wrote a book. Him and his partner have probably one of the bigger prop firms in New York City. I'm going to recommend his first book for you, and we'll get into that in just a minute. So have tech stocks cooled off? Are they beyond the optimal entry? What is the next trade in tech stocks? That's what we're going to talk about. So stick around. We're going to be back in just 1 second. Okay, so thank you so much for joining me here today, everybody. Remember, if you want, you can type into the chat any stocks that you're looking at today or in the coming week. I want to set up the tone of the week, and we're going to just jump right into the market, which is actually setting up whether or not this wall of sellers here is going to end up leading to a bigger blast off, or are we going to pull back a little bit? Let me actually, I got to share my screen. That always helps, right? It's Friday. It's been an exhausting week. So we're talking about over here. So now one of the biggest things, you remember, a lot of what we've been talking about this week has been built around following the order flow and then understanding if the tape has changed. Now, one of the biggest things in the market right now, the order flow, the short-term order flow is very, very obvious at this point, but we've kind of hit a wall. So that means that we have to be really smart. One of the most common questions we get when we're looking at stock picks is, how do I get better entries? Well, right now we're going to be looking at a pullback to set up a better risk reward on the trade. So we're going to use a very simple tool, something we've been talking about quite a bit recently, which is a Fibonacci tool. And I'm going to show you how I use that right now. So we're going to hop on over here, and we're going to measure this move right here. Okay. So if we hop on over and use the Fib tool and we start here, what we really want to do is look for the next spot to be a buyer. And let me zoom this out a little bit so you can see I measured this move right here, which actually coincides with this big wall of resistance over here. So what I'm going to be looking to be doing for the next optimal entry. So I want to be clear about this. The market has now rallied, right? We're up in that resistance level, and I want to give the market a little bit of a chance to breathe to set up the next optimal entry. And I'm also going to show you that same thing in AMD stock in just 1 second, right? So I wanted to pull back a little bit, because what happens is when your stocks expand, there's a certain amount of profit potential. But if they've already used up most of that profit potential, we need for that to expand again to justify taking risk. So if we buy stocks, we want to know that there's a good chance that the reward that we could make is justified for the risk that we have to take. Everybody knows that, right? Risk versus reward. So we just want to see them pull back a little bit. So if we're talking about the SPY specifically here, I want to see the SPY, which is right now around 414. I want to see it pull back in this area here between 404 and 406, because that will end up then setting up another move like this, which this move right here was about 20 points, maybe a little bit less than 20 points. So if we pull back into that area, then the next level we're going to head up to is here, which would be the next minor resistance. If we take that same trade and look at that into AMD, now AMD actually came out yesterday, 2 days ago, and earnings were not that spectacular. But now we have 1, 2, 3, 4, 5, 6, 7 green candles in a row. And you can see that we actually have a pretty significant level coming up here in the 109 to 110 level, which basically means that there's going to be around $5 to $6 in profit potential before the stock kind of hits a wall. So now, again, as a trader, you have to determine how much are you willing to risk for that potential $6 profit potential in a stock that's actually been pretty strong and might even be considered what a lot of people might say overbought. We like to use the term optimal entry because it gets us to focus on where is the greatest spot for me to get involved, where the reward potential is expanded the most. So in this case here with AMD, you can see that the AMD stock is actually a little bit extended and near a pretty big resistance where sellers came in pretty hard and pushed the stock down. So what does that mean? Well, it's two different types of trades in AMD right now. The first trade is trading from where it is now up to that 109 level, roughly $6. So if there's $6 profit potential before the next place that we're expecting sellers to stop that stock, if we use a 3-to-1 risk reward ratio, that means a $2 risk on this trade makes the most sense. Now, if we have expanded profit potential, which would have to be above that 109, 110 level, then we can have a different risk reward because the reward potential is expanded a little bit more. So I want to take a look at that and we'll give you some ideas here. So 109, but then we actually have this bigger wall of resistance over here, which is roughly $15 away. So if we're talking about 109 to 124, that's expanded dramatically from only $6 up to 15. It's almost 2.5 times more. So if we're willing to risk $2 to make $6, if we have a $15 target above 109 to 124, that's now $16, which would roughly translate into a $5 risk in order to make that $15 or $16. So first, we're talking about the probability of it going up, and the probability of it going up is because AMD is now well into I believe it's like a 5-week move at this point. 1, 2, 3, 4, 5-week move. So what we just did now, and we kind of talked about this before, is we're setting up next week's more aggressive trades. So we need that risk reward to expand for that bigger profit. We have to give the stock a little bit more room to breathe. So I can't express this strongly enough. This is one of the biggest challenges that we see when people come into our boot camp is they're pretty darn smart, but they're buying at the wrong time, which means that they're chasing the idea as opposed to planning for it. So we just discussed two different trade scenarios in the same stock, and they were both based on the order flow is good. The tape is still obvious. Remember, order flow and tape reading. Tape reading is it still valid, which in this case it is. It's valid, but the profit potential is a little bit lower because of that wall of selling. Now, could it go through there? Sure, there's a possibility it can go through there and go straight to 124, but it's not likely. Remember, we have to trade for what probably happens, what happens most of the time, and then we set up risk reward. So those are two ideas for next week. I actually see a couple of people typing in some stocks. Let's see, Dave talking about X. So let's actually hop on over. That group of stocks has actually been relatively strong. So you can see 4 or 5 weeks worth of buying here. So what I love about X right now, and if we bring this down over here, okay, we also have a 2-step trade in X. We got some minor resistance over here. But what I love, and again, if you're a regular viewer of the channel, you know that the way that we analyze things is we want to manage the risk during a pause, and we want to look for profits during the push out of that pause. So Dave actually identified a pretty awesome idea right here where we have a push and a pause, a push and a pause. And yesterday's candlestick in X is what's known as a bullish engulfing candlestick. It took out the low and it took out the high of the previous candle. We would have liked to have seen this close a little bit stronger. That's okay. So we have potential now between 23 and basically 26. And you can see all the selling over here. There's much more expanded profit potential. And you can see this big triple top up here, maybe even a little bit lower up into the 38 area. So now you have a decision. And if Dave was in my office, what I'd be looking to do in X right now is because there's bigger profit potential. Let me actually pull that up on the screen. This pause is awesome, but there's bigger profit potential between here and here than there is between here and here. So we have almost a conundrum right now for Dave, is that it's a really good order flow. Reading the tape, the trade is still valid, but there's a little bit of resistance where sellers came in the last time, just above where we are right now. So for me personally, in this particular trade with Dave, if we were in my office talking about, we're in New York City, we're having a coffee, it's 7:30 in the morning, just like we're doing now. I say, Dave, what I'd be looking to do in that trade in X, the stock is US Steel, I'd be looking for that to be a two-step trade. I'd put the first piece on during this pause. So if we can get a visual of what that pause looks like, which is this pause right here. So basically above this pause here at 24, and my stop loss would be down here just below this pause at 22. The first piece would be there. And then if we get a similar push and a pause above this level, I'd be looking to add here and then using a trailing stop loss up into this area over here. So what's kind of fun about that is it's not a bad idea. It's actually a pretty good idea. But we have to remember, if we're going to take risk, if we're going to accept risk on a trade, the profit potential has to justify the risk. So in this case here, it's a pretty solid idea, but the initial profit target is kind of close to where we're looking to get in. But beyond that has a lot of profit potential. So for me personally, and it's a relatively inexpensive stock, it's $23. In this case here, I'd be okay with a two-step trade, being in this trade a little bit longer and giving it a chance to push up to that 38 level. Now, if you want to use the stock market power pyramid like we teach on the channel here, and hopefully you're a regular viewer of the channel, we talk about this every day. If you're not, please do me a favor, hit that subscribe button. If I've earned it, hopefully I've earned it for you. What we want to do now is we want to know what stocks are in that same industry group, because that will give us conviction to say there's a lot of buying in that group and we can hang on and have a good chance of thinking that's going to follow through. But if none of those stocks are doing the same thing, then we're just trading that individual stock. We can still have confidence in the trade, but probably not as much share size. So I'm going to show you how to do that right now as well, which is kind of cool. All right, so we're going to break on that. We're going to go over into this software, FinViz. You know, we talk about this pretty much every day, right? So we're going to type in that stock, X, right? So we got United States Steel. Now, the big part of what we're talking about here, we know that's a basic material stock. That's one level up, but then we're talking about steel. So if we break this down a little bit here, you can see that there's 260 stocks in the basic materials sector, but that's not what we're looking for. We want to get a little bit more specific. What we want to know is we want to be using stocks that have smart money attention, hedge fund attention, institutional attention, so that it means something to us. If hedge funds have their attention on it on an everyday basis, then we should have our attention on that stock, because typically that stock will be in play. So we're going to filter this down a little bit more to give Dave, and you can do the same thing. I'm just using Dave's trade as an example, into other stocks in that group. So we're going to go over here. And if you're new to FinViz, you want to make sure you click on all over here, so this whole thing pops up. We're going to click on average volume. So we want to see at least 1 million shares traded per day. And you can see that knocked out 150 stocks. We also want to go down to average true range, which is the amount of volatility in that stock, which also means profit potential. And we want it to move at least $1. So you can see that now that's actually brought 260 stocks down to 38. But we want to make that even stronger, which now we want to filter that down to stocks that are showing some recent relative strength, which means they're also above the 50-period moving average. And you can see now that brought that down to only 16. So what we're going to do now is we're going to sort these stocks by volume to show us which ones are active. So you can see in all of these stocks, these are all the stocks that are in basic materials. But Dave is asking about X, and we're trying to help him build that argument for X. So now we're going to go from basic materials into just steel. So we're now working the list. So this group of stocks right here, X, actually, you know what? You probably can't see it. Let me pull the charts up. That's probably an easier way to do it and make that a little bit higher. So we have Dave stock here, X. We have NUE, STLD, and CMC. So what we basically just did is we worked our way up the stock market power pyramid. And I'll just bring this into the screen again in case you happen to be new to the channel and you haven't seen this before. This is what we work off of. So we looked at the market today first. We're about to take a look at sector rotation. Now what we just did is Dave kind of went in backwards order here, as he went for the stock first, and then we just went over industry groups. So essentially what you can imagine here is this pyramid is the more of these foundational pieces you have on the side of your trade, the greater conviction that you should have in following through. So we get that question quite a bit from new boot camp members that come into our community. And it's one of the biggest revelations that they have when we first start working together over that 14 days is understanding that not every trade is the same. Some trades you should have holy mackerel, really big conviction on that idea, because the stock market power pyramid is all there. The market's on your side, the sector's on your side, the group is on your side, and you can have some conviction in those trades. Other trades that are just at the top of the pyramid where you might just have that one stock that's trading good and you could trade it with confidence, but maybe not hold as long and maybe not trade as many shares because you don't have that whole pyramid underneath you. When you come into the boot camp, that's the very first thing that we talk about is understanding how to find good ideas. Are those ideas still valid? And then how do you know how aggressive to be with your profit taking and your risk? And once you understand those kind of things, it's like, how much do I like this deal? That's really what it comes down to. And it's a very structured process. Then trading becomes a lot less stressful because you're prepared well before you plan to make the trade. So then, you're just basically like, kind of just looking at your sheet and you're like, okay, today we talked about trading X and here's my plan. So once the market unfolds, Dave now has a plan for exactly what I would do, and maybe he might do the same thing. By the way, our boot camp actually starts on Monday. It's 14 days. It runs from Monday for 2 weeks. It's only $195. You get everything that I do. If you want to learn about that, you can click the link below the video. I'd love to see you on the other side. So anyway, let's hop on over and want to get into the sector rotation on some of the other ideas. So if you want, you can take a screenshot of the power pyramid because that's a big deal, right? So these are the stocks that Dave should have in his watch list. So we're actually going to do the same thing over here. So this article on energy prices, energy stocks have dipped, but oil says stocks are still a buy. So we're going to hop on over and do the same type of analysis on crude oil. We're going to just take a look at crude oil futures, and you can see that we had 95 as a pretty darn big level, right? So now this group of stocks is starting to pull back despite good earnings. If we head on over into Chevron, and you can see Chevron had earnings and now pulled back, and ironically, came pretty darn close to perfectly filling that gap fill. Now, just from a pure technical analysis perspective, generally speaking, and I'm going to show you a chart of another stock that just got clobbered on earnings last week and then rallied all the way back up to the spot where it got clobbered from in just 4 days. It was the most amazing short covering rally I think I've seen in a long, long time. We'll take a look at that stock in just 1 second. So normally when stocks pull back or rally into what is a gap fill, that's the language that we know. And you can see that here in Chevron. So the earnings came out who are amazing. And now we've kind of melted down into this gap fill. Normally that's a spot to say, okay, that's where we expect it to stop and start going in the other direction. But now again, putting those pieces together using the stock market power pyramid, we're now talking about crude oil has a very heavy offer. So crude oil is now going down. It broke that big support. Despite the fact that Chevron is at that gap fill where we would expect it to stop, there's a bigger picture thing pushing it down. So right now, what we need from Chevron before we look to buy those really good earnings again, what we need to see is a candle like this. This type of candle here where it trades below that previous candle and rallies, that's a little bit of short-term buying pressure that's now validating a move back in the other direction. So we need to see that today to start looking to bid into this again because this earnings was amazing. So we're looking to see happen in Chevron today is we're looking for it to push down and reverse and best case scenario close above this level, which is a candle that looks like that, but it happens over here. So if we do a little bit more of a deep dive, the same way that we just did talking about Chevron, we're actually going to go into, let's actually start right from the top. We're going to go right into Chevron. And you can see it's oil and gas integrated. Energy is the bigger group. And that has 276 stocks. So we're going to click all over here. Now we're going to go down to oil and gas integrated. All right, let's just do that again. I know I did that fast. I just want to show everybody. Oil and gas integrated, right? So now we're going to go down into the industry group a little bit. We're going to click on all. We're going to go to volume again for over 1 million. Average true range of at least $1. And now this is the group of stocks that we would have in our watch list to look for buying pressure. And you can see the whole group of stocks has some pretty heavy selling pressure right now. So what we'd be looking for in Chevron to be buying into those amazing earnings that they had last week, we're looking for it to trade lower today, knowing that oil prices are going down. We are looking for that to reverse and close above today's low and close above today's open. If that doesn't happen, that's not giving us the entry signal yet. So we're really watching that. Now, the article that I just showed you, the person in that article is basically saying that oil prices were so exaggerated, this is just a pullback. That remains to be seen. But I now have a list of stocks to trade Chevron, and I have a list of a pattern set up for when I'm going to get involved with that. One other thing we want to talk about, let's talk about AMD in a little bit more, because we started talking about that this morning. Let's actually talk about Tesla here. This is actually a pretty big deal. Again, talking about another 3-for-1 split. So Tesla stock will be split again. And if we hop on over to Tesla and take a quick look at that stock right now, obviously the stock has been on fire. You can see earnings over here. We are consistently making higher lows, showing the buying pressure. We are consistently making higher highs. Now, the challenge is, where is the next level for Tesla for a potential profit target? And it's all the way up in this area. You can see that we kept getting to this level and we just couldn't remain above it. So we're basically looking up right around $1,150. Now, the challenge that we're going to have is how far the stock has already gone. It's gone from 680 to 940. So very close to $300 rally here. And there's nothing wrong with that. However, you can see how big the profit potential is here. So do I still like Tesla as a buying opportunity? I do. There's a lot of things that they're doing right now. Now it's just a question of coming up with the optimal entry compared to where Tesla normally goes. And quite honestly, it's actually still coming out of a pause. But here's the thing, that if we're looking at a swing trade, if we're looking at the next move, because Tesla has a much higher average true range and a much higher average true move up here at $922, that means in order for us to stick with that trade, we have to give it a little bit more room. So looking at Tesla from my perspective, right now, you can see it actually just paused for 4 days. The risk on this is down here, which is $874. So it's basically a $50 risk. So $50 risk would mean that we'd need to be looking at $150 to the upside, which would basically be taking us right up into this area of 1,075. So when we're setting up trades, it really comes down to 3 things. Probability, which is what is the likelihood of it continuing to go in that direction? And right now, I don't see anything telling me Tesla's going to go in the other direction at the moment. What is the proper risk and the potential reward? Right now in Tesla, right now for the risk for me is roughly $50. So in exchange for that $50 and the probability of it continuing, I'm looking for $150 profit target on that next trade. So that's how I map out these ideas from a risk reward. But risk reward doesn't matter if you don't have probability first. So first it starts out with probability, which is where we do order flow. What are the odds of it continuing to go in that direction? Then we only look for the entry and the target. Remember, there's no point in looking for the entry if there's no probability. Then you're just guessing. We never want to guess. We want to say what's probably going to happen because it already is, until we see that change. So we have order flow and tape reading, and tape reading tells us whether it's still valid or not. I want to talk about this book because we get, again, you guys are here, men and women here with me early in the morning. Trading can be very competitive. It's kind of like being a professional athlete and whatnot. And I have some friends in New York City. They own one of the largest prop firms in the city, Mike and Steve, Mike Bellafiore and Steve Spencer. Super, super good guys. If you have a track record and you're looking for capital, definitely reach out to them. But Mike wrote a book that many people call a trading classic, quite honestly. So if you see this book right here, let me pull it in. One Good Trade. If you've ever been curious about what it's like to be a prop trader, what it's like to trade for a firm, to trade somebody else's capital, how competitive it is, how much work goes into being a full-time trader every day, that book by Mike, One Good Trade, is a really, really good book. And Mike and Steve are super, super guys. Look at this book. Mike actually has a second book called The Playbook. Both of them are worth investing in, probably some of the best money you can spend. But I think what's really interesting about this is probably all of us have that dream of, I want that financial freedom, which comes with being a professional trader or trading on my own. Even if you're not looking to trade for a prop firm, it's a fascinating read for a couple of reasons. Is they do a lot of descriptions and explanations of what it's like to be on their trading floor and the rigorous training that it takes and the commitment, the deep commitment that it takes to trade at those highest levels. But I think one of the most important things is actually the title of Mike's book, because we actually had a conversation about this last night on our coaching call, which we have every Thursday night. And again, if you want to join the boot camp and attend my private coaching calls, click that link below. I'd love to see you in the coaching calls. Last night's call was 2 hours. That's how intense they can get. One of the questions we had, and one of the things that keeps popping up often, is the mistaken belief that each trade matters. And I know that sounds a little bit weird, right? But what Mike is talking about here in the book is make one good trade, then make another good trade, then make another good trade. I can't express strongly enough that sometimes we get too lost in whether or not that trade made money or lost money and whether or not it was a good idea in the first place. To almost instantly elevate your conviction as a trader, it really comes down to, am I making good ideas? Am I finding good ideas after time after time after time? Or am I throwing in those ideas where I'm shorting a top, buying a bottom, trading in the middle and nowhere? Those are not good ideas. And that pushes you out further from getting profitable. So when you think about the big picture, it's one good trade after another. And if you manage risk and then learn how to manage your winners, you're going to be in really good shape. The first part, though, is understanding how to develop an edge, because you need an edge first to believe in the probabilities. If you don't have an edge, there's no probabilities. If you do have an edge, obviously I'm teaching you my edge now. My edge is order flow and tape reading. Once you have that edge, then you have to trust that the edge works over a large amount of trades, because that's what happens. Most of the time, good ideas will follow through, which means sometimes it won't. So when you accept that and really believe that as a core part of yourself as a trader, I promise you, and I'm on video, so I'm not going to say anything I don't mean. I promise you, when you believe in probabilities and you understand that you have a good edge that you've traded with real capital, or one that you've learned, like I'm hopefully teaching you right now, when you believe in strategy and edge, you will take every trade without hesitating. You'll take every trade without hesitating, because it doesn't matter if that one trade makes money or loses money. It's all of the trades that make up your edge that get us paid. So if you could think about this from a different perspective, when an algorithm, a profitable trading algorithm, makes money, it doesn't second guess the system. It just sees the trade, takes the trade, sees the trade, takes the trade, because over a large sample of trades, it's profitable, assuming it's a good edge, right? So we have to start thinking that way, because the question came up last night, I hesitate too much. If you hesitate, it's simply because you don't trust the edge. If you have an edge that works, and again, I'm hoping that you're getting my edge. If you have an edge that works, the only reason to hesitate, if you believe the edge works, is you don't trust yourself to follow it. And that's kind of psychological part. We just need a little bit more discipline to say, well, if I want to make money over time, I have to trust my edge works over a large sample size. If I believe in my edge, which means nothing more than there's a good chance it's going to hit my profit target versus my stop loss. If I believe in that, then I have a responsibility to take the trade, manage the downside, and then learn how to make more money on the upside. It really is that simple, but we have to do some psychological work to get out of our comfort zone to say, it's really the edge that does the hard work. It's the trading system that does the hard work. We just have to follow it in order to be those kind of profitable traders that we all dream about, right? So we also talked about sector rotation today. I want to hop on over and work into sector rotation. And just, again, this is the research for the week. So you can see sector rotation coming in here. Consumer cyclical has been really, really strong. And we actually saw Airbnb yesterday, which did not have great earnings, but you can see now we cleared this breakout level. We got a little bit of resistance over here. So again, this is another two-step trade, because if you can see where it is now, probably one entry here, maybe even wait for a pause above this level. But the next level of resistance is all the way up in this 156 area. Now, the one other trade that I want to talk about, which is kind of interesting, we talked about a short covering rally before, and we talked about a stock that got absolutely demolished on earnings and rallied all the way back strongly up into the level where it got crushed from. So this is a short covering rally. We had a really good question. A lot of people asked this. How do I distinguish between a short covering rally and new buying? So this stock, which is Roku, let's actually take a look at the chart of Roku, rallied all the way back up, and you can see the earnings. This is the previous day to earnings. This is the day of earnings. And if we draw this line in here, you can see it rallied all the way back and took out and went beyond that level, which is pretty darn fascinating. So you can see the stock is bearish. You can see the big push to the downside. This rally here, which is fast, is short covering. Short covering means that these people who sold the stock betting on it going down had to buy that stock back, which means covering. When it doesn't go down anymore, they're panicked and they have to get out, which is what creates that fast move. So short covering rallies after a down move, big push to the downside, and a fast move to the upside because people are panicking to get out of it. They're buying it back because it's not going down anymore. What happens next is what makes the difference between a short covering rally versus new buying. If somebody is now going to believe that Roku is a bargain now at this lower price, although it rallied all the way back up to 81 and change, it's not the same discount anymore in the 60s. What we would need to see next, in order for us to be reading the order flow and reading the tape in Roku to determine it might be a new buying opportunity, we would need to see it go sideways on lighter volume. Because essentially what that would mean is the sellers have dried up, that big move to the downside has changed. And if we go sideways, that means that they're holding the bid. If we go sideways and hold on to that level and then kind of peak right back above that level where we were, which is right over here, if we go sideways and then get above this key moving average, and really best case scenario above this big wall of sellers here right around 97, that would be when I would consider looking to be a buyer of Roku. But Roku right now to me is a short sale until I see that happen. So I'm going to give you one more thing. You can take a screenshot of the list of the biggest ideas that we have coming into today, into this week. So you can see the rotation. Technology is remaining up there. Take a look at some of the industrial stocks. We've actually been looking at and trading pretty actively 3M, and you can see what it did yesterday. Again, you can see it came into a little bit of a wall, but this is why it's really important to be tracking this on a day in and day out basis, because you start to get the ideas as they unfold. But this is the big picture here. You want to take a screenshot of this. You can see that we have 38 stocks that meet the criteria for stacked order flow coming into today, coming into Friday. But I want to break this down a little bit more over here, and you'll be able to take a little bit of a deep dive. So you remember how before we were taking a look at X, and then we went into the sector, and then we went into the groups. So if you take a screenshot of this, you'll be able to see not only the sector and then the groups. So this will give you an idea of where smart money has their attention now and where you should be having your attention, because they're actually pouring money into those stocks. They can't hide their footprints, which is what we're going to take a look at right now. So if we take a look at that on the chart, and you can see we sorted this by sector now, there's some stocks in the basic material, and look at that, exactly what was spoken about before. They're in the steel stocks, right? Now we work our way down. Consumer cyclicals getting a little bit of buying pressure. We just talked about Airbnb. Chewy, pretty good couple of days. And Lennar, these home builder stocks have just shown some amazing, amazing buying pressure. So again, there's no reason to guess when you understand what you're looking for. Look at that consistency in the buying. But then as we work our way down, financials, really nothing exciting there. Healthcare caught a little bit of a bid. That's mostly off of mRNA, if you haven't been tracking that one recently. The explosive moves in NR, that's definitely beyond the optimal entry, not something for me to do right now. But look at the technology list here, dominating the list here. So there's a lot more ideas on the tech side of things than there are anywhere else. But now what's kind of cool is we can break this down and go a little bit deeper into the individual groups. So now you can actually see where semiconductors in here, AMD, NVIDIA, right? Software applications and solar. We're actually going to finish up on this. Solar, Nova, ENPH. So I'm going to give you a list of those guys. So ENPH has been the top of that list. We've also been trading Run, Nova, and to a little bit of a lesser degree, SPWR. So hopefully what you're seeing here is the sequence in the power pyramid. We work from the market, we go to the sector, we go to this industry groups. So once we have that structure in place, then it really becomes pretty easy. Then the last thing we have to discuss as we work together is how do I time my entries better and how do I time my exits better? Because once you know what you're looking for, you're not lost anymore. And that's really a big part of the exciting part of the market and where trading becomes really fun when you know what you're looking for, you're not lost anymore. When you know what you're looking for, price action is never confusing anymore, because if what you're looking for is not there, you don't do anything. If what you're looking for is there, then we just have to work on entries, exits, and managing those trades, which we call the optimal entry and the profit maximizer. So look, our boot camp starts next Monday. I would absolutely love to see you in there. It's 14 days of me doing this with you all day long. So if you want to trade with me for 14 days and get my entire system, click the link below. The last thing I want to finish up with here today is this. Obviously, in about a half an hour now, we're waiting for the jobs data. It's a really, really big thing, and that could completely shake the market up. So be on top of that now. In about 25 minutes from now, it's going to shake everything up and maybe blast it off again, or maybe that whole inflation conversation comes back in and scares everything again. So we'll see. Thank you so much for joining me here today, everybody. I really, really appreciate it. If you could take a quick second, subscribe, hit that like button. And if you want to trade with me for the next 2 weeks starting on Monday, click that link below and learn about the 14-day bootcamp. I'd love to see you on the other side. Have an awesome day, everybody. I will speak to you soon. Want you to know how much I appreciate you joining me on these episodes. Take care now.